Well, David Tepper, of course, was still bullish on the S&P 500 when he came on CNBC this morning. He's a smart man, and I wouldn't try to fight the large traders here. You can see the green line here. This is David Tepper and his colleagues, the large speculators, large traders, hedge funds such as his Appalachia fund, pension funds, institutions, and you don't want to fight that trend because that's the vast majority of the volume in equities today. Now, one of the few things that David Tepper was bearish on, at least for the next 6 months or so, was commodities. And here you see an index of the king of the commodity-based currencies, the Australian dollar. Clearly, this uptrend no longer exists. It went into this long consolidation pattern and then broke down decisively to the downside. That is another break of trend that you don't want to try to fight. And then looking at the Japanese yen, he also mentioned that he thinks the yen is going to continue to be on the downside for a long time. And I couldn't argue with that. If you look at this trend, you can see that the large traders have been selling that for a long time. And unless we see some type of break in this downtrend, I wouldn't fight that trend either. An obvious way to play the drop in the yen is to invest in a Japanese ADR, the king of which is Toyota Motors. But one thing I would point out, looking at this chart, which goes back to 1994, I would say that it's only less than 10 points from its all-time high. One that may have a little more room to catch up is Sony. Certainly, I'm not thinking that it's going to go back here to this extreme level, which was right before the dot-com bomb, and it was during the time when the Sony headphones were the king of the day, which, of course, now the Apple iPhone has taken that away. I wouldn't expect it to go back to this level right here. But more reasonable would be to expect that maybe it could go to the 60 or the 40 level, and that would be a doubling from here. And remember that just today, a very timely thing, Sony management has hinted that they may be looking into a restructuring. And here's a 2-year chart of Sony. It does look like the downtrend that was predominant until the beginning of the year has been decisively broken, staying above that 50-day moving average and recently starting to accelerate. Just an idea there, and I am considering a long position in Sony. And of course, another way to play it is USDJPY. That uptrend is still strong and probably can continue. Looking at the longer term time frame, the weekly, you can see that it still has quite a bit to go before it reaches what we can see on this chart. Resistance first would show up at around 110. I'm sorry, that's the monthly chart, not the weekly chart. So if you're going to go into these yen plays, they would be longer term plays, not shorter term plays. So you would want to place your stops not based on shorter term time frames. You would probably look to place a stop somewhere around the 98 level if you're going to go long the USDJPY. Just one more look here at that comparison between Toyota Motors and Sony in the white. You can see that although Sony is probably not in as good of a business, it's in a lot tougher business than Toyota right now. There is still a lot of room to catch up there, and I would think that you might get more bang for your buck, possibly a double if you have a long enough term time frame, by going with Sony instead of Toyota. But either one would be fine.